All right, this is our Forex blog for September 30th, 2011. And like most days, we want to trade the strongest currencies. So you find currency pairs are made up of two different pairs. You want to buy the strong ones versus the weakest and sell the weakest versus the strongest. As you can see on the top, we have the dollar and the yen, which most people trade against some of the bottom pairs. And we have the real-time statistical trend strength and histogram. Underneath that's the next time frame farther is half an hour to 2 hours. Daily, weekly, monthly. When all the time frames line up, as you can see in the dollar and the yen, that trend's very likely to continue. One of the weakest trends later in the day was like 6:30 right here with the euro. The daily, weekly, monthly is just slightly up, but you can see the intensity is way over our 80 level. And at that time, the dollar was stronger than the yen because the yen had about 3 hours of weakness there. So selling the weak euro versus a strong dollar after 6 o'clock, you can clearly see on the chart. Continued down about 30 pips. You wait for a little pullback right here. You draw your Fibonacci profit target levels on the first wave, and that gives you a great idea of where to get out on the next move down. Our containment bands usually contain price 85–90% of the time. As you can see, it found the low right here, and that's where the market stalled and reversed back up. And it's also my Fibonacci profit target levels I do the analysis for each night, so they show up on your charts for you. Let's look at some of the other examples today. Pound has continued to be strong like it was yesterday. 330 right here is one of the strongest. The daily, weekly, monthly is up. And anytime you find a currency where it's very strong on multiple time frames, it's very likely not only to continue in that direction, but to continue in that direction for more than just 30 minutes. As you can see here, you had about 2.5 hours of upward strength. So basically 330, which one was one of the weakest? Well, the CAD was previously weak, the daily, weekly, monthly trends down. The New Zealand also weak on all time frames, and those are the two most blood red weakest currencies. So you could basically at 330, when the pound resurfaced with incredible intensity, you could buy the pound versus the CAD or the New Zealand. This is not a chart that we normally trade, so let me bring this up. Pound CAD. You want to be buying this pretty much from 3:30 until about 8, when the pound lost its strength. And as you can see, it went up about 90 pips, pretty much straight up. You got this. If you missed the first trend move up, you could have bought the next pullback by drawing a trend line over the down wave. And you can see it kind of came up and went sideways here. Even if you got in it late, you have a nice 30 or 40 pip move. If you risk 10 pips and you make 20 or 30, that's really the key to trading. Small losses, big wins. It's not rocket science. Here's the pound versus the super weak New Zealand too from the same time. This one didn't quite move. Well, actually, it did go up about 50 pips. It just doesn't appear to be quite as big of a move. But this one at 330, you're looking for a breakout over the high here. You always want to draw your fibs off the previous wave to get an idea of where the next profit target is. And guess where it went? Right to the first 1.382 fib, and almost to the exact pip, the 1.618 fib level. And so whether you got out at the first one right here with a small 35 pip win, or you held for another 30 pips. Now most of you want to use our new range charts. These are vastly superior to time-based charts because instead of a 5-minute bar or a 10-minute bar, excuse me, you have price, or the chart's made up of a certain number of pips. So for example, here we have the euro dollar with a 6 pips per bar chart. Anytime it moves 6 pips, a new bar starts, and if it takes 1 second to move 6 pips or an hour to move 6 pips, it's totally price dependent. You only make money when price moves your way a certain number of pips. So having a range chart gets rid of all the noise in the market. As you can see, it was coming down with a lot of weakness. You have this nice little counter trend move here at 630. Anytime you have extreme weakness at and above the 80 level, usually that trend will continue. You can draw your fibs off this little wave here. This is more for short-term scalper type traders, but you'd be short this around 35.13, out at 89 for a quick 20 plus pip move, while risking, in this case, we recommend the number of pips on the bar plus 1 or 2 pips padding just to get rid of some of the noise. And so you're risking less than 10 pips, and you made 20 pips in this example. On the way up here, you can see a big move up in the pound dollar earlier, 4 o'clock. Pullback right here with less weakness than there was strength. And again, you just simply draw your trend lines over the down wave. And most of the time, it's going to go to the next fib target on the way up. And you can see it pretty much went almost to the exact pip, maybe 1 pip over it. So you would have been long this somewhere around 89, out this at 26. So you made 36 pips while risking 10. That's a 3 times bigger profit than what you risk. So it doesn't take a math genius to know that you can be wrong more than half the time. As long as you have, a few big wins like this, your wins will be bigger than your losses, and that's how you make money. Let's look at the pound yen. One of the strongest ones today. Look at this explosive trend strength at like 345. There was barely any pullback at all, and as you can see, there's no weakness whatsoever right here on the bottom. Let me move this up so everyone can see it in the blog post. Extreme strength, pullback, no weakness. This is probably an 85% winning trade. They're very rare. You might find 1 or 2 a day if you're lucky, or if you're awake and trading during that time. But as this continues up, you can see extreme strength comes back in. You keep moving your stop up. Oops, sorry about that. You keep moving your stop up underneath the sideways consolidation. And when a trend's this strong, usually it's very likely to continue up, but you want to usually exit half your trade once it kind of runs out of steam and hold the second half of your trade for a little bit more pips. Or you can get out of the whole thing when it pulled back here and bought it again and make another 20 pips the second time. Whether you want to get in, out, or just kind of get in and hold for a couple waves, that's up to you. Here was, for those who didn't see the pound dollar, I moved this up so that it's being recorded. You can see that wave up had a lot of strength. The pullback had about 30% less momentum to the downside than the previous wave up. And really, that's the only secret. You can see the exact same thing here in the euro yen. Big move up. Now this one's not quite as good as the pound yen because the price did not take out the previous swing high right here. You always have an increased odds when price moves higher than it did before. But nonetheless, you buy this pullback right here. You can see explosive strength up. Very, very little weakness on the way down. In fact, it had 80% less weakness than it had strength before. And guess where it went? Right to the Fibonacci profit target again, which the majority of the time, probably 80-90% of the time, somewhere between the first and second fib target is the maximum profit you're going to make before the currency pulls back a little bit. So that's it in a nutshell. Use our currency meter to identify the currencies to trade, the ones to buy and the ones to sell. This is a build your own trend tool, which gives you literally millions of different combinations. You can suit all of our statistical trend tools to your style. If you're a scalper, you want them to be very fast. If you're a longer term trader, you can use longer term data and longer term periods, and it can help you stay in the trends for days. That's it for the Forex blog.